So the most successful organisations change themselves repeatedly, but it's very hard for most organisations to do that. Often, the change kills you, but if you don't do it, you'll just die slower. If you're successful, you'll get the benefits, but as the Red Queen observed, the race never stops.
Everything comes down to speed. Keeping up with the pace of change is ultimately the biggest differentiator on the banking battlefield.
The best way for financial institutions to remain relevant and to add value for their account holders is to curate, differentiate, and evolve digital experiences and products strategically in meaningful timeframes.
To move at speed, traditional banks need to rethink their culture and org structure. Banks do know this, and some have already started to strive for real change.
You are starting to see people who can do it. Goldman's with Marcus, for example. It's no longer seen as the crazy hippie madmen who are coming up with these ideas. It's suddenly, at the very top of the organisations, people start to think, maybe this is possible.
It all begins with a mindset shift and a desire to become truly digital. There are 4 key success factors needed to become truly digital, which will in turn increase the organisation's ability to move at speed. A truly digital culture, digital business models, digital business operations, and truly digital tech architecture. However, before you can even begin the journey to truly digital, it all starts with the people leading the charge.
Well, if I was in the executive leadership team of a bank, first of all, I'd make sure that at least a good proportion of my executive leadership team were digital people.
If you don't have the people internally who really understand how to make these changes happen, then actually it's a little bit like the blind leading the blind in that sense. It's quite a difficult thing to really get to.
Not everybody has to be a software engineer, but leadership has to be at least technologically literate and proficient enough to understand what's going on around them and to then and therefore decide where to strategically focus in terms of execution. Once that cultural piece is taken care of, they will execute on that vision and they will organically get to the technological needs required to pursue any ecosystem strategy.
Once the organisation is aligned to a truly digital culture and mission, the business is empowered to push for real change. What should they do first?
So in looking at all of these opportunities and challenges, the first thing a bank or credit union need to do is assess their current capabilities.
I'd get the whole of that team to bring the Rubik's Cube onto the table and pull it apart, and then take the pieces that we believe we do really well and put them back on the table and see what pieces are missing.
If you built a whole product catalog of all the things you have to offer in a bank, how many of those today could you just pop on the catalog and say, okay, all digitally, we can have these enabled today? And when you take a hard look at those and find out how many aren't, that's where you start on that journey, is what of the ones that aren't digitally available, what are the most important ones?
You got the leadership and the culture, and now you know what you have to change. But what comes next? An increased pace of change requires a new architecture. To achieve this, there are 3 fundamentals to implement that reorganize your banking stack. Fundamental 1, monoliths to primitives.
Banks are typically set up as monoliths. Startups are typically set up as services or primitives. What does monolithic mean? A monolithic stack is where everything is tightly bound together. It's almost like a big stone monolith and everything is there. Where you want to get to is to break your monolith down into lots of smaller pieces, almost like smaller stones or smaller primitives. Having these base primitives means that change can happen easier, it can happen faster, and it can happen with less risk. Individual teams, these small 7 to 8 man autonomous teams, can be responsible for one service, one base primitive. If change has to happen, you only have to change that team, and that team can control what happens. With a monolith, if you want to change something, you have to deploy the entire stack. That is why, in a primitive, service-based world, change can happen almost all the time. In a monolithic world, change takes 6 months plus.
Fundamental 2, moving from silos to horizontals.
At the moment, banks are set up as fairly vertically integrated organisations. The bank will want to do everything from the customer experience down through the bank processing and deeper into the regulated money store of value and money movement capabilities. What needs to happen is that banks need to move from vertical silos into horizontal layers.
If you have broken your system into base-level primitives that can be recombined to create new products, as a result, you have broken down your silos. Once you have new horizontal primitives, then you need a backbone to join them all together. This is the spine of the architecture. It enables the horizontals to work together and acts as a single source of truth across the entire architecture and facilitates better communication between them. And finally, Fundamental 3, moving from whales to schools of fish.
With a layered approach, you can switch out these suppliers with relative ease. So rather than hiring a single vendor, which is what happened, you can imagine that's almost like a whale, what you now want to build are capabilities out of shoals of fish. Who you use as your payment capability is different from who you use as your identity capability, and various layers up the stack, compliance, so on and so forth.
Moving from whale vendors to school of fish providers allows you to be more flexible about which providers you use and helps you to avoid vendor lock-in.
Vendors make everything hard. Like, if you're a vendor like Oracle, you really want to sell in all of your products to make the fact that companies can't survive without you. Like, it's in their economic interest to make themselves irreplaceable.
Banks, because they're trying to use a single supplier up and down the stack, are subject to whatever that supplier gave them. What may well have once been best of breed becomes history fairly quickly.
Banks are moving to much more of a partnership-based model. Find the right partners and create the right ecosystem for them to be able to deliver not just the needs of today and tomorrow, but the needs of 3, 4, 5 years' time that no one has actually defined as yet. That mindset shift is just in the process of starting to happen now.
I think the awareness that a bank doesn't have to actually solve all problems internally in its own four walls is an absolutely critical one, because partnering with best of breed in different areas, in different markets, I think is something which is almost an inevitable requirement to be able to, again, innovate and keep nimble.
There's plenty of partners out there who probably do the pieces of the Rubik's Cube that the bank doesn't do well, and it'd be far better to architect the bank to rebuild a Rubik's Cube with the partners and bring them into your ecosystem, rather than trying to build it yourselves and doing it half as good.
These 3 fundamentals are the keys to unlocking your new culture, architecture, and BizOps. Culture and tech are intrinsically linked. These new structures allow you to move at pace, make decisions quickly, and share knowledge across teams. It reduces risk and cost as you're not working in repeated silos and empowers your people. And it aligns the org to customer outcomes to grow your revenues. However, for traditional banks, making the change is going to be hard, as they have responsibilities to their large customer bases that they have to maintain throughout this change cycle.
The most crucial thing, first and foremost, is, for any bank to just keep providing the service, not go down, because it is mission critical for banking customers. And that is like open heart surgery, right? So you cannot take the system down. It still needs to work.
When the bank cannot be allowed to go down in order to facilitate change, which approach should you take to making these migrations? One such approach is the Big Bang migration, where the whole bank moves customers and systems to a new architecture in a short space of time. However, while in theory it gets you where you want to be quicker, it is full of risk and can be calamitous to both the bank's internal teams and their customers if it goes wrong.
In fact, there's one bank, and I won't say who it is, which one in the UK, that decided to replace mainframes and COBOL, and they took quite a few years. When they rolled it out to their customers, it was a drastic failure. CEO lost his job. They lost thousands of customers who moved to a different bank. Sometimes people get in a hurry to get something done.
So this is not a short and sharp intervention. This is something that needs to be carefully managed and curated over time.
There are other low-risk options available without the high stakes of a Big Bang migration. One such approach is a Greenfield build.
So a Greenfield build is where a bank sets up something off to the side. People talk about greenfields in different ways, as a digital speedboat, as a lifeboat so that they can get off the main mothership, as a flanker brand. And actually, it's probably more than just a flanker brand. It's actually a flanker governance process and a flanker technology stack. So something off to the side. This is an area where a bank can innovate quite dramatically. It's outside of the main bank stack. They don't have to use the main bank infrastructure. They don't have to use the main bank governance processes. You can set this up as a fintech.
A Greenfield build gives you the flexibility to start something from the ground up, outside of the internal governance processes that slow banks down, that can be run in tandem with the parent brand. However, as it is entirely separate from the main organisation, there is no proof of concept within the parent company, nor does it directly change any culture or technology within the parent brand.
The other thing that banks can do is really a brownfield build. This is where you go into the main stack and you start to change the underlying infrastructure and processes. Brownfield builds are much, much harder than a greenfield build. Brownfield builds are much harder because you have to deal with the existing governance processes in place. What is better in a brownfield build is kind of to make it look a bit like a greenfield build and to take a very thin slice of what you're going to change. You don't want to change everything, but you simply want to focus on one user journey down through that stack. And it helps to ensure that actually the changes you're making at the bottom of the stack are aligned to the customer experience proposition at the top. Once you have been able to get that slice in place, you can start to move out.
By building a new tech stack, one product at a time, a brownfield thin slice creates the highest pace of change and balances short-term and long-term gains. There are many options to get you en route to truly digital, but not changing is not an option.
Humans are really great at paralyzing themselves with the fear of how big something is. And actually, if you think, okay, we're going to consolidate 25 different systems, and we're going to have everybody running off the same instance, and we're going to have 1,000 people running in Agile. It's like, well, this breaks my brain. Like, this is going to be very difficult to do. If your fear of getting it wrong is greater than the opportunity of getting it right, then I'm not surprised that people don't do anything. Whereas actually, if you atomize change, if you make things small, it's like trying to cook amazing soup and putting all the salt in one go. Like, it just never works. You put a little and often in to ensure that you're controlling the impact that it actually has to the outcome that you really want to drive. So for me, it's just start small, pick a system, pick a project, whatever you want to do, and do it in a different way. Because once you feel the outcome's difference, you'll never go back.
It doesn't even need to be something that will actually work long term, but it needs to be something that is viable and outside of the governance processes, such that actually they can learn and they can see how things might change. Getting that knowledge into the bank is critical. Getting that knowledge into the bank at the senior levels is critical. Getting that knowledge into the bank at senior levels with people who have the ability to enact change is fundamental.
As we said at the start of this series, the game has changed on the banking battlefield. The challenges for the traditional banks are stacking up, but they have a lot of advantages on their side. If they can become truly digital and unlock a faster pace of change, they can really compete and even win on the banking battlefield. But will they?
Some of the big banks have really made bold moves, or at least created momentum in the types of changes that we really think that they need to, whether that be technology or governance or culture or whatever.
So I do think it's possible for banks to change. Whether banks will change, that's a different question.
The challenges come from technology, from regulation, from changing consumer patterns of behaviour. The question really is, do they have the organisational agility to be able to handle those things changing and moving around on them all at once?
But equally, hey, they've still got a huge amount of investment potential. There's huge amounts of smart people.
I think it wouldn't be right for us to kind of just write them off as the dinosaurs.
I think that if banks can actually sort out their governance processes, they will be unstoppable.
The only reason that they lose in this sense is that they choose not to act quick enough.
They have many customers, they have balance sheet efficiency, and most importantly, they're actually pretty good at what they do, and that is banking.